You're neck deep into your career right now, and I see you actively out there, talking to your network, building your brand, and honestly, I see you getting all these awards and stuff. So tell my audience, tell our old friends, um, what you've been up to these last handful of years as a pro.
Yeah. Well, first of all, thanks for letting me jump on your platform, man. I'm really excited about this. I mean, as in high school, as football players in high school, I'm pretty sure we never thought we'd be in this position to be talking about, some of the stuff we're going to talk about today, or even be on a live recording together. But it's exciting. It's really exciting. I know I've been doing some things. I've seen you do a ton as well, so I admire that as well. But as far as myself, man, if you want to kind of give you a little bit of, I guess, lay down the tracks as far as where I've gone since high school up until now. I mean, I had a chance to go to school at SDSU, graduated with my degree in business administration. Had a great opportunity through a program that allowed me to do a work traineeship internationally. So spent a year down in South America teaching in Colombia at a private school. I could tell you tons of stories about that another time. It was amazing.
Is that where you learn capoeira? Capoeira.
Actually, yeah, it's funny. I was hanging out with some friends, and I think we were gonna get ice cream or something, or walking down the street, and right there on the street corner there was a group of people playing capoeira, and they were opening up opportunities to be students at their studio had just opened up, and so yeah, that's exactly where I learned it. So
That's awesome, man. Now we did a video right when COVID started, and we're in my office, hiding in the corner so nobody gets in trouble for our lack of social distancing. We didn't know whether to handshake, high five, or knuckles each other, so we just kind of goofed around with it a little bit. So I mean, I know that you've been in the I would consider what your job, I don't even know what your job title is, but I would think that you're in this life planning, wealth planning type arena. Tell me a little bit more about that for us.
absolutely. So I've been the last, I'd say about the last 11 or 10 years, 10 or 11 years, I've had the opportunity to be a part of an amazing firm that we're probably a little bit non-traditional in the way that we go about doing our business. And what that means is I am in the financial industry. I consider myself a financial professional. And what
Yeah.
we found is that the majority of financial advisories in the industry, they have a tendency to focus on what we consider your top one percenters, individuals that may be able to come to the table and have, I don't know, I guess maybe $500,000 or more liquid to be able to move around and invest and all that good stuff. Well, the
Yeah.
challenge is that that's a very small percentage. So what's happening to all the other families that are out there, all the other individuals that don't fit into that caliber of clientele? Well, they're being left behind. And so we've taken on a crusade of no family left behind through helping individuals first with financial education, financial literacy, and then helping them move into different solutions and strategies to help them to start make number one, better decisions for themselves, but also be able to take care of themselves in terms of saving for the future and protecting their legacy.
So what does that look like? I mean, you just used some, very sophisticated language that you guys have probably worked on for a long time. But like, what does that mean? Like, let's just say, one of our old friends from high school or college is watching this video right now, and they're like, "What is D up to? Financial literacy, $500,000 or more? Like, not what does this mean for the everyday person that you come across?"
Yes, and so I'm glad you brought that point up. So we like to try to do our best to simplify things. I feel like a lot of the barrier to entry to people wanting to learn about money and how it works is they feel like someone's going to talk over their head, right? And so we try to keep things simple. The first thing we do is we educate them on what we consider to be the three rules of money. The first is, believe it or not, understanding compound interest and how it works. Um,
Yes.
you know, there's tons of people out there that they may have heard the word compound interest, but they don't understand exactly what that means. Some people, believe it or not, Mike, have not heard of it at all. So we educate them on that first, and then we talk about the different ways that we can get money to grow. Right? Do we want to be in a safe place with the fixed type of strategy? Do we want to get involved in maybe, some up and downs in the market with potential for growth, but, there might be some challenges in the market every once in a while. And then there's, hey, let's put our money in maybe an indexed growth strategy, not to be confused with an indexed account, which that's a whole different conversation, but basically meaning that I have protection on the downside with growth potential and my money's safe and I still get it to grow safely. I mean,
So
there's a
is this
tax.
money is this money after tax money that you're looking at helping people with, or is this pre tax money that you're helping people with?
Great question. We actually do both. We've got individuals that may come to the table and maybe they've got some pre-tax dollars that were sitting in an old 401k from an old job,
Okay.
maybe an old IRA or something like that. And they've been having some not so great experiences in the market. And so we can help them move that money into a position that's going to protect them a lot more. Then we do also some of the after tax as well. So post-tax dollars, allowing them to put some money away and get some great tax advantages when it comes to growth and that stuff.
So, I get paid every 2 weeks. You're basically, helping them maybe auto debit from their checking account to your investment account. And you're helping guide them to where to place those dollars that can grow safely, right?
Correct.
All right, cool.
Correct.
Nice. And so from there, Compound Interest is one of those books I got when I was like maybe 22. A friend of mine gave me a book called Simple Wealth, Inevitable Wealth. It was a book on
Mm,
compound interest. And, it taught me to, at the time in my 20s, I was probably doing maybe $100 a month auto debit into an account that was compounding interest on a monthly basis. So I saw that
mhm.
grow, and I believe in it. What other types of products and services would we think about when we're looking at a long term strategy? Let's say I'm 40, got a couple kids. I just bought a house, or I've had a house for a while. What other things should I be looking at um, to grow a little bit, but not through any of these get rich quick schemes or anything like that.
Correct. Yes. So one of the things that we're huge on is maybe structuring some type of individual retirement account for individuals, especially if they've got a situation where they're currently, got money sitting to the side and they want to put in a position to where it's going to have some safety, but then still be able to move for them and get the compound interest you talked about. We're also using which it's starting to be a lot more popular and it's been around for gosh, over 110 years now. One of the strategies is your cash value life insurance policies, believe it or not.
Okay.
Those have been around for decades. And so it's funny enough, we've had people that come to our office and they sit down with us. They've had some experience. And maybe they're a little bit more well off. They have more resources, and they come to the office looking for an opportunity to put money into some of these types of policies. And so we're just taking that same information and we're bringing it to mainstream now and saying, hey, look, these wealthy folks have been doing this for decades, leveraging it for different types of opportunities that are out there for them. We just want to bring it to mainstream and say, hey, you can do the same thing. It's available for you as well.
Nice, nice. I mean, that's really awesome. I mean, I can only imagine that going after a client that's gonna buy a $5 million life insurance policy is a better home run for you. But to help the average Joe that needs the support so they can become that future $5 million client, that's awesome as well. I get calls from clients after they buy a house, and they get tons of mail, right? They just bought a house, they just moved in, and their mailbox is full. It's full of all kinds of, my opinion, fluff.
Mhm.
But one thing has always popped up is the mortgage life insurance. What is that about? Because I just never know what to say, to be honest with you.
Say probably within the last 4 or 5 years, I was exposed to it myself. I didn't know it existed. And I was actually going to a client's home to do an annual review, and he had just purchased a brand new townhouse out here in California. He lives out in the Temecula area, and so as soon as I sit down with him, he gives me this flyer and he says, hey, I got this from an insurance company. Do you know what it means? They're asking me to buy insurance to protect my home. And so I kind of looked it over. I did a little bit of research. And so what happens is a lot of companies, once someone makes a purchase on a home, they start to solicit them with what's called mortgage protection insurance or mortgage insurance, which essentially is a life insurance policy that allows that the lender is the beneficiary of the policy. And so how that works is the person's got a policy on their life, right? And if they pass away, the lender receives the benefit in terms of the amount of coverage as the benefit of the policy. And so when I saw that, I said, okay, well, that's great. At least the home can get paid off if the family wants that to happen, right? They've got that money the money goes directly to the lender, but they can
Mm.
have the opportunity to have that home paid off. But then what happens to the family in terms of having money left over to maintain their lifestyle?
They got nothing.
What happens?
I mean,
100% nothing.
generally speaking, if it was, mom and dad that unfortunately passed away, the mortgage gets paid off through the policy you mentioned, and then the kids got nothing, right?
100 exactly, and that's the challenge there. So the solution was, I talked to my client. I said, hey, listen, I know we've got your policy in place. You got a mortgage that's a little bit higher than what your policy is, so I think we need to add a separate policy to cover that. Instead of you going for the mortgage insurance coverage, which is going to allow the lender to be the beneficiary, let's go ahead and get you a policy that you can own and control, and we can match that amount in terms of your coverage amount and your mortgage balance. So if something happens to you, now your family receives the check for the coverage. They can go, if they like, they can go and pay off the mortgage, and now they've got a mortgage-free home. Or if they like, they can continue to make payments on them. Whatever they want to do, it's up to them. But at least they have control of what happens, after something unfortunately might happen to you.
I think that's great play because I think having no debt and no income is not really great. But if you have a bunch of cash in the bank and you do have debt and a monthly payment, you can amortize that cash to being withdrawn little by little on a monthly basis to live, right? So not only are you able
Yes.
to, so the mortgage insurance pays off the loan and now you got a house, but you still owe property taxes, you still owe insurance, you still owe maintenance, etc. If you got
Yes.
if you were the heir and you received the cash, you did not pay off the mortgage, but now you have significant cash to make the payments, right? The mortgage payment, the taxes,
Yes.
insurance, repairs, and maintenance, and maybe even pay off a few things while you're at it as well. I think cash
Yes.
is, when the consumer is in control of their cash, they definitely have the ability to live a happier life and to do more things with that cash versus being debt free on that house. Yeah,
100%.
yeah,
100%. So that was the strategy. So and he loved the idea, of course. It's going to give his family the opportunity to have control, and that was the important thing for him.
nice. And do you guys do trust? I mean, because how does it work with trust? Do you guys help fund the trust, manage the trust, create the trust, or any of that?
Yeah, so we actually have a relationship with an amazing company that they've created an online platform for clients to go on, answer. It's very simple. Answer a series of questions. Once they're done with the questions, all of their responses populate on a document that's an actual legal document in the form of a will and a trust. And so we can help to refer them over to that company and get that taken care of. Um, by the way, I don't know if anyone that's watching has ever tried to do any research on what it might cost you to get a trust and a will and a trust done.
Yeah,
From what I found, generally it's maybe on the average about $2,000 to $3,000 for that an attorney is going to charge
I
you.
agree.
Yeah. So through the program that we've actually been able to help people with, the basic will and trust is going to be $600. That's what they're charging for that service.
Nice,
So
nice, and that way,
yeah.
for a few $100, you protect your entire legacy by staying away from probate court, which is
Yes.
at least $10,000 in probate costs to your heirs.
Yep.
You avoid creating taxable events because of probate, but instead the trust lives
Hmm.
forever. And then that, my best guess is you probably put all of those life insurance policies, all of those funds in the name of the trust, and that way, when the principal passes away, it doesn't create taxable events, and the heirs know exactly what they get based off of the will of the principal. So that's a great play, man. That's a
Yeah.
great play.
Yeah, that's actually what you just mentioned. That strategy has been around for decades. And there's a family many people may have heard of called the Rockefeller family,
Yeah,
they call it the family bank.
yeah,
And so, and here's the thing: I want people to know a lot of things we talk about here today. You don't necessarily have to be someone that is a multimillionaire, own tons of businesses. You don't have to be someone that's super wealthy to use any of these strategies. These are available for everybody. And so now the information we just want to make it available for your average individual that hasn't had the chance to have maybe a financial professional reach out to them because maybe they don't meet a certain income limit or they don't have a certain amount of liquid assets set aside, right? We want to bring this to everybody.
yeah. That's awesome, D. Because I mean, I remember, I walked in the bank one time and I was talking to somebody about getting financial advice, and they they had a minimum. Like, I need at least $1 million. Well, how do I get to 1 million if you don't give me the advice? Like, how do I save 1 million if no one's directing me with my funds right now at whatever amount that is, whether that's 5,000 or 100,000. You got to start somewhere.
Hmm.
And
Hmm.
what I'm doing with some of these first time home buyers, I actually just had a great lunch with my friend's son, who's now 19, and we're getting him started right out the gate with an auto debit from his paycheck going into a savings account, in efforts of trying to build an account that will have a nest egg for him down the line, so he can be able
Mm,
to buy a home. Um, and
nice.
Not everybody. I don't know about you, D, but I didn't get that kind of advice when I was a kid. Not me.
I wish I knew all the stuff that I know now, man, when I was coming out of high school. Let's just put that, or even in high school.
Yeah,
I really think there should be a legislation put together that makes it mandatory for people to learn about what we talk about. Financial literacy. Right now in the United States, as far as I know, there's only I think there's about 7 states. There might be a little bit more that require financial literacy to be taught in
man.
school, and California wasn't one of them because we never had that opportunity, right? So,
Yeah, yeah. Wow, man. Well, that's just amazing to hear. It's kind of sad, but I guess it's up to us, right, as individuals, to share what things we
yes,
wish we could have known when we were younger, and get the word out there.
absolutely. That's the crusade right there. You just mentioned it. That's exactly the crusade is
That
go out there, leave no family left behind.